Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500. History has repeated itself. Over the past few years, we saw an overextended bull market with signs of greed starting to come into the markets. During the final stages of the bull market, we saw divergence in price, with price continuing to increase as the momentum indicators started to wane down. I made several videos on my YouTube channel discussing the fact that this bull market was coming to an end and that we were starting to make signs of a topping pattern. So what happened is that we got the first big leg down of this bear market, crossing this trend line that was holding up the bull market for the past 11 years. After the greed phase and the blow off top, we have the correction that follows, and after the correction that we just had, there tends to be a bull trap that comes before a full-on recession. And this bull trap tends to be followed by a wave of selling going back to a nice support level. So today I am going to make the case for a significant bounce in the markets. It does seem like the markets have started to bounce. I wish I could have made this video earlier, but we'll have to do with what we have. Before we dig deeper into this, don't hesitate to like and subscribe if you haven't already. It is not easy making a case for a large bounce in the markets, considering the current situation we have, not only with the virus, but with the fierce fear that we have in the S&P 500 currently. So let's go back to the 2000 and 2008 stock market crashes and see if we can make out some sort of pattern and draw conclusions from them to where we are now. So let's begin by the 2000 dot-com bubble, where the first wave of sell-off started here in January 2000. We got a powerful sell-off that crossed the trend line right here, the bull market trend line that formed from 1995. And you can see this first powerful wave of sell-off actually ended up making a oversold RSI reading. And you can see as soon as we got that oversold RSI reading, we had the bull trap. We had a V-shaped recovery in the market that seemed like it could potentially spark a new leg up in the bull market, but actually ended up failing and leading to the next wave of selling all the way down to here in 2002. So in 2008, we can draw the trend line from 2004 all the way to 2008 right here with a few reactions here, and we can see again a pattern. After the first wave of sell-off from the top, we broke the uptrend line, holding the bull market together. We hit an oversold level on the RSI right here, and then we get the nice bounce. We even got a backtest of the trend line right here, and this was a V-shaped recovery for a few weeks. So this is very typical of the beginning of a recession. You will get a bull trap, you will get optimists who invest into the stock market thinking the bad times are over. And then comes the final wave of sell-off, the most powerful wave of sell-off all the way to the bottom. Now let's compare that to exactly what's happening in 2020. We can see we have the bull market trend line right here, holding the bull market together since 2010. We got the top right here. The first wave of sell-off broke the uptrend line right here, and also made a RSI oversold level right here. And keep in mind, this is the weekly chart, so an oversold level on the weekly chart does not happen that often, and it is definitely something to watch out for and may lead to a few weeks of rally. So today it does seem like we have reversed of the lows we made right here. If you manage to book profits at the bottom, seeing the reversal pattern that was developing on the daily chart, well, congratulations. If you didn't manage to book profits, then I'm confident in the months coming we will revisit this support level and perhaps even lower, as I said earlier in the video. So what can we expect from this bull trap, from this dead cat bounce? We have already made a significant rally off the lows right here. But for this bull trap to be durable, for it to last more than just a couple of days, we need to break this level that we went under a few days ago. I'm going to clear the chart so you can see a little bit better right here. This 2,400 point level is very significant. We need to get back above it in order for there to be a durable bounce. And I'd say this is my next target right here. On a break above this 2,400 point level, will likely hit this resistance right here. And my maximum bounce target would be this resistance level here, the 2,700 point level. Could we still see downside? Definitely. We haven't hit strong support yet, so from a technical standpoint, we've reversed pretty much in the middle of nowhere. This was a slight support. You can see there is a slight reaction off support right here. But the more probable scenario would have been to hit this support level that we created in 2015. So we could still reverse during the day and hit this support one last time before we have the bull trap. But again, that doesn't necessarily have to happen. This is definitely a bullish candlestick so far, so if we close the day green today, it may definitely spark a longer term rally, intermediate term rally, before we get to the later stages of the recession where we'll see massive drops in price in the stock market. Now, from a fundamental standpoint, we can also make the case for a potential bounce in the markets. As you know, on the daily chart, we can go and check it out. We saw many divergences building right here. You can see, I'm going to delete that, but there was divergence building on the RSI as the price moved lower. This means that the market is waiting to reverse. And so the market is waiting for some type of good news to spark a rally to the upside, to spark a relief rally. And you can clearly see as soon as we have a few days, a few green days, we'll see the momentum start shifting to the upside, and we'll have likely some buying pressure to get back up to above resistance levels. Now, what could that good news be? I know for a fact that there's a lot of discussion about hydroxychloroquine and the use of antibiotic treatment to reduce the symptoms of the coronavirus. If these give promising results, it could definitely spark a rally. I also know that some European countries are showing a decline in the number of new confirmed cases, which again could spark a rally. Now we are going to take a quick look at the hourly chart and see exactly what's happening with the downtrend line that we're forming. So you can see we can draw a downtrend line right here, capturing the majority of the tops right here, and you can see we actually broke the downtrend line with the gap up today. The market's just opened, so it's still the beginning of the day. A lot of things can happen. If we start reversing, that would be a false breakout, and we'd likely head down for more downside on a break below this support level. But again, if we start rallying above this 2,400 point level, we'll likely visit the resistance levels above. So if you want me to give you a summary of what's going on the hourly chart, we are sandwiched between this resistance level and this support level, and until we break one of them, it's very difficult to say what's going to happen. When we do break to the upside, we'll likely see a significant rally. You can see the resistance levels above are 13% above where we are now. And I think to the downside, below this support level, I think there's another 4% down to go. So strictly from a risk-reward standpoint, there is more reward to the upside and less risk to the downside. So I am switching my portfolio to very temporary longs and closing out some of the shorts, some of the profits that I've made along the downside. I will be keeping you guys up to date. Hopefully this trade does play out the way I want it to. We did manage to trade this bounce during the downtrend. Hopefully we can trade another bounce and then follow the market back down. That would be a perfect swing trade for me. Now that's about all I wanted to cover in this video. I hope you guys enjoyed. If you did, don't hesitate to like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.